Welcome to People Who Perform, the Real Estate Careers Podcast. Each episode will bring you conversations from business leaders and up-and-coming stars in the commercial real estate industry in Canada. Our guests will share their unique career journeys, passions, and advice on what it takes to be successful in this industry. This podcast is brought to you by HighView Partners, connecting people who perform in Canadian real estate.
So welcome back to our podcast. Today's episode is going to be a little bit different. We've got a HighView roundtable for you. So my business partners, James and Rich, are joining me today, and we're going to unpack some of the key takeaways from our recently published 2026 Real Estate Compensation Guide. James, as many of you know, is based in Toronto avec moi, and Rich runs our Western operations and is based in Vancouver. So James, how's it going?
Yeah, it's been a great start to 2026. Thanks, Nick. We're working on lots of exciting mandates in Toronto with our existing clients and lots of discovery calls happening with new clients as well. So it's been a really positive start to the new year. How about you, Rich? How about out west?
Hey guys. It's good that you guys are picking up the activity straight out the gates. I think it's been a good start here for us in Vancouver. We've been pretty busy at different industry events. Neil and I were up at ICSC last week. We've got BuildX next week. It's February 3rd, just to timestamp this. January's flown by, but yeah, I think some green shoots kind of happening, I would say, which is good.
So as many of you know, we release this comp guide annually, and it's built from real survey data across the Canadian real estate industry, also combined with what we're seeing every day in the market with our clients and our candidates. So today we're going to talk about what's really happening with salaries and bonuses, how much confidence there is in hiring right now, career movement, and really what it all means heading into 2026. So I think what we'll do is we'll start big picture, guys. So when you both step back and you look at the data and the conversations behind the guide, does 2026 feel like a growth year for hiring in real estate? Or does it feel a little bit more of a tighten up and focus on execution kind of year?
Mm-hmm. Yeah, for me, 2026 really feels like a year of discipline rather than expansion happening across the industry. Like hiring is absolutely happening. Like that's clear, like no question mark on that. But it's happening with far more purpose. And what we're seeing is a shift away from building ahead of growth and toward hiring that directly ties into execution and performance and delivery as well. So, clients are asking very practical questions right now. How do we protect cash flow? How do we improve operating performance? How do we get projects over the line and make better decisions with the team that we already have? And I think that mindset is really shaping where and why they hire. So instead of just like adding headcount for scale, I think roles are being created with very specific outcomes in mind, like asset performance, cost control, project delivery, financial oversight. And there's just a much clearer line between the role and the result that it's meant to drive. Now, I don't see this as a pullback, so to speak. I think it's more of a sharpening effect, right? Like in many ways, it's creating a healthier hiring environment where the roles are clearer, the expectations are tighter, and people being brought in are genuinely hired to move the business forward, not just to prepare for, a future of uncertainty. So yeah, at this time, I would say we're in a market that rewards focus, judgment, accountability, and I think that's showing up in how hiring decisions are being made.
Agreed. Very, very valid points there. Rich, what do you reckon?
Yeah, I agree with a lot of that. I describe the market as being in a bit more of a reset and focus phase. So it's, as James said, it's not that companies have stopped hiring, but perhaps the bar for adding someone has just gone up. So every hire needs to make sense in the current environment. And yeah, the strongest roles out here are still definitely tied to revenue, cost control, and asset performance. So those positions feel justified because you can draw a straight line between that person and business results. Mm-hmm. So yeah, we're not seeing this broader overhead sort of addition of roles. It's more select. And I think the other piece that's worth talking about is when the market slows, hiring becomes more tactical. And some groups use this moment to step back and ask whether, the team they built 12 to 18 months ago still fits the reality of today's business. So if certain roles or individuals aren't performing at the level needed in a more disciplined environment, this can be a time to level up talent, rescope positions, or reconfigure role responsibilities. So what worked in a faster, growth-driven market doesn't always cut it when margins are tighter and really its execution matters most. On the flip side, we're also seeing companies downsize because of market conditions and then choose not to backfill those roles. So in a lot of cases, that means the rest of the team is there picking up the slack and making it work for now. So people are being patient, they understand the market, but that kind of pressure can build over time so that when conditions improve and we see movement, people are then reassessing their workload, their growth plan, and whether they feel supported. So, just to come back, hiring hasn't stopped. It's just more deliberate, more performance-driven, and much more closely tied to business needs. And I think at the same time, some of the decisions being made now are setting up future hiring and the movement for when the cycle kind of turns and picks back up again.
Mm-hmm. So not frozen, just sort of more intentional. So one of the ways in which we organise the comp guide and really how we think about the industry, rightly or wrongly, is in 3 sort of broad talent categories. So strategy, operations and corporate. So why don't we sort of take a look now at where the demand is? So within those 3 areas, guys, I mean, where are we expecting the strongest demand this year and where might hiring be a bit softer, let's say? So James, why don't you start with strategic roles?
Yeah, as I mentioned earlier, owners are much more focused on cash flow as well as portfolio performance and disciplined capital deployment right now at this time. So that's going to increase the demand for asset management professionals, ones that can improve income, control the costs, and make smart decisions around capital planning as well as the asset strategy. And these roles, they're always directly tied to performance. So they're going to continue getting support, like even in a tighter market. Now, flipping that into the investment side, hiring is still happening, but I would say it's more selective. You've got less about deal volume and you've got more about careful underwriting, risk assessment, and making sure that we're structuring these transactions in a higher cost of capital environment, so to speak. So groups are looking for people who can protect that downside as much as chasing the upside too. Moving into development hiring, I think this is where things get a little bit shaky. The pre-sale condo market has slowed dramatically, and that had a real impact on development careers back in 25. And I think we're going to continue to see much of the same in 2026. There's fewer projects penciling, there's longer timelines, stalled launches, have meant that there are fewer roles that are coming to market. And teams are also downsizing and consolidating. I mean, we witnessed that in the GTA with some of the big developers pulling back the reins. And I know from speaking to Rich, it's been a similar story out west as well. So you've got a lot of professionals who, the ones that built their careers in this fast-moving condo cycles are going to be finding the environment much more constrained. Now, that said, development hasn't stopped, it's just shifted, right? So we're seeing activity in PBR, purpose-built rental, we've got affordable and non-market housing, and those larger, well-capitalized groups that can carry projects through a slower cycle. All of those teams are being cautious, but they're still moving files forward, especially where there's going to be long-term capital and policy support at play. So I think to summarize, strategy overall, demand is strongest where work ties directly into existing asset performance and disciplined capital decisions. And it's a bit more muted where growth depends on faster moving pre-sale condo market that simply just isn't there right now.
That's right. Okay, thanks, James. Rich, what about roles that sit in operations? What are your thoughts there?
Yeah, so operations, I think this is one of the areas where we're seeing the most consistent demand right now, starting with commercial and residential property management. owners are doubling down on operating performance. In a slower market, there's just less margin for error. So the focus is on keeping buildings competitive, controlling those costs, and really delivering strong tenant and resident experiences. In particular, on the commercial side, demand for licensed property managers, especially here in BC, well, it's been a constant theme and it hasn't eased. So I've been recruiting in this space in Vancouver for over 15 years. And I think expectations on those professionals is really, it's only increasing. So it's no longer just about day-to-day operations. You're layering in sustainability initiatives. There's more sophisticated client reporting, much tighter cost control and higher service expectations from both your tenants and your institutional owners. So the roles become more complex, and experienced talent remains hard to find, especially those that are licensed. Kind of same on the residential side, but we've got this push in purpose-built rental. Demand's really, really strong. So there's a lot of new product coming on board. Vacancy rates are rising in some markets. And therefore, like, managers aren't just operating buildings. They're working to compete to lease up new projects while retaining existing tenants. So it's taking a lot more effort, stronger marketing coordination, and tighter operational discipline to keep these buildings on track. So moving into building operations and engineering, this is another area where demand continues, I would say, to outpace supply. The buildings are becoming more technically complex. Again, sustainability requirements are sprinkled on top. And then you've got the kind of the pattern of experienced operators moving towards retirement. So there's definitely a gap there, and the demand is there for people who could manage systems, vendors, work on compliance. But it's that communication piece with tenants and ownership that's extremely valuable. And just briefly on construction and project management demand, it remains solid, especially for experienced leaders who can manage risk and deliver those projects in a more disciplined cost environment. But junior hiring is a bit more cautious. There's just not the volume of projects kind of coming up. But I would still say, proven, experienced project managers and construction leaders, they'll still be in demand this year.
And then finally, corporate functions. What are your thoughts around that, James?
Yeah, so the strongest demand in corporate, no surprises here, accounting and finance. Mm-hmm. We got tighter margins, lots of refinancing activity, more scrutiny from lenders and investors. And so companies need stronger financial oversight, and that increases that demand on A&F professionals, especially the ones that can handle forecasting, reporting, and especially property and project level accounting. So real estate groups are going to want better visibility in performance and costs. And so finance teams are going to be, right at the heart of that. At the same time, this is one of the stickier parts of the talent market, because you've got experienced accountants with real estate backgrounds, tend to be stable. Employers work hard to retain them. They don't want to lose them. And, the term we use in recruitment is the unicorn, so to speak. So while demand is strong, it can be quite challenging to move these people unless there's a very clear step up in scope or long-term opportunity. As for HR, the demand is steady, I would say, but also selective. Companies, they need strong HR leadership around retention, workplace planning, and supporting teams in these leaner, more disciplined environments that we find ourselves in now. And HR plays a very important role in making sure that the right people are in the right seat, in the right role. And I think there's a clear path for development and succession. Now, that said, companies are cautious, at least the ones that we're speaking to, about expanding HR teams unless there's a very specific business need that was required. So that could be supporting growth in certain areas, managing change, and strengthening leadership capabilities.
Mm-hmm. What about sales and marketing?
Sales and marketing, probably the most uneven area in corporate right now, I would say. And, obviously that ties in with development, as we spoke about earlier. And with these pre-sale condo market, slowing, especially in markets like Toronto, GTA, Metro Vancouver, sales activity has really pulled back in 2025. Fewer launches, longer sales cycles. They're just naturally going to reduce the hiring momentum, and it's pushed teams to be more deliberate in their approach. But as we move into 26, I think activity is expected to recover gradually, but it's going to be at a much more measured pace. Now, in terms of demand, I think companies looking for sales and marketing professionals with very strong strategic capability, like the type of people who are contributing to price strategy, they're working on product mix decisions and making sure there's clearer buying communication, there's definitely going to be demand there. And also, like in organizations with rental portfolios, teams are also leaning more into rental leasing and marketing as competition for tenant increases, right? So which means just a lot more collaboration across leasing as well as asset management. So hiring, I would say, is going to remain selective. Is going to be tied to specific projects or repositioning efforts rather than this broad team expansion like we might have seen in previous years. So yeah, to summarize corporate, I would say it isn't a rapid growth hiring story, but these roles do remain important in helping businesses operate in a more strategic manner in a slower market.
Amazing. That's a great breakdown. So I think what we're saying in conclusion here is that strategy is tied to disciplined capital and asset performance, operations drive day-to-day value, and corporate continues to support financial and organizational control. Cool. So let's talk about what that means for pay. So Rich, let's hear your thoughts around what people are actually expecting when it comes to salary increases in 2026.
All right. Yeah. So we asked this question in our survey back in November, December. And yeah, it's interesting. So expectations are definitely on the measured side. I think the largest group of respondents by far, this is almost 47%, are expecting between 1 to 2.5% total compensation increase. So that tells you that people understand the environment we're in. They're not expecting big jumps unless there's something kind of significant changing in their role. But we also saw about 12% expecting 2.5 to 5%, and another 12% of respondents were in the 6 to 10% increase range. So there's still, a good segment that's feeling as though there's room for meaningful growth, but it's definitely not the majority. At the same time, we've got just over 9% expect no increase at all. So that's a reflection of how cautious some organizations are being with their costs right now and how they're communicating that with the rest of the team.
Mm-hmm. And what about bonuses? I mean, how are bonuses holding up?
Yeah, this was actually one of the more surprising parts of the data. So despite a more slower disciplined market, bonus expectations are holding up much better than I think people would assume. I certainly did. Almost 48% expect to receive their full bonus for 2025, and another 24% expect to receive more than half. So when you combine those, you're looking at over 70% of people expecting to land at least the majority of their target bonus. So that suggests that even in a cautious environment, many organizations are still finding ways to reward performance and maintain confidence within their teams. But there's definitely nuance in this. So we're seeing a bit of a split by level and by function. So at the manager level and below, bonus expectations tend to be closer to that full target. And these roles are often tied to more like stable operational performance. So outcomes are a bit more predictable. But then at the more senior level, there's some disparity. So compensation at that level often tied to kind of broader business, portfolio, transactions, those kind of big picture performance. And there's just more variability on that depending on how the year played out. And then if we zoom in, areas like development, I think the results there, not overly surprising, but we didn't see too many respondents in that sector expecting those kind of full bonuses. So yeah, a bit of a mixed picture, but overall, bonuses were holding up pretty well.
Mm-hmm. Thanks, Rich. So Let's talk now a little bit about job movement. Have professionals still been changing roles, James?
Yeah, they have. I mean, roughly 1 in 5 professionals changed their job last year. So mobility hasn't stopped. It's just more measured than it was in those peak hiring years that we've seen. And what's encouraging is that most of those moves were either sideways or forward. You've got a solid portion stepping into roles with more responsibility, and you've got many others that made lateral moves at a similar level. Very few took a step back, which tells us that people are being very deliberate and intentional about the moves that they're making. They're not just moving for the sake of it, and they're looking for that right fit and that right career progression.
And once someone decided to make a move, how long was it taking them to land somewhere new?
So for a lot of people, it's still happening within a few months. Many landed something within that first 1 to 3 month window, and some even faster, which shows the market is still very active. And that said, it's very specialization specific, right? So in higher demand areas such as property management or accounting, strong candidates can still move relatively quickly. But when you look at other parts of the market, especially development, where activity has really slowed, it can be a much tougher environment. And in those cases, it's not unusual to see searches stretching to 6 months and beyond. So, strong candidates still landing well. But I think patience is really key. The timeline really depends on where you're sitting in the industry and how closely your experience is lining up with where the demand is right now out there in the market.
Mm-hmm. Got it. Thank you. So why are people making the move, Rich?
Yeah, I mean, lots of different reasons, of course, but looking at the survey results, compensation is still the biggest single driver. So about a quarter of people who changed roles said that was the main reason. But of course, it's not the whole story. A big group also moved because they wanted a new challenge or a different type of role. And then others, felt like their career growth had stalled. So in a slower market where promotions aren't happening as quickly, some professionals feel as though they need to kind of move externally to keep on progressing. We also saw a noticeable portion of moves tied to organizational changes or layoffs, particularly in parts of the market that have been under pressure. So, overall, people aren't just jumping for the sake of it. As James said, most moves are intentional, and people are kind of weighing everything up, certainly assessing opportunities very carefully before pulling the trigger.
So what matters more right now then? Is it flexibility or is it pay?
Pay still tends to carry more weight when someone's making that final decision, but flexibility, absolutely, it plays a role. It's just more of a supporting factor, I would say, rather than it being the main driver. What's interesting from the survey is that the hybrid versus in-office question has largely settled. We had over half of respondents who are working fully in the office, and most of the rest are in some way, in some form of hybrid work arrangement. Fully remote roles are actually pretty rare now. So for most people, I think the structure is pretty clear. They know the expectations, and companies have generally found their rhythm on how work is getting done. From the employer perspective, most groups are actually quite good about offering flexibility, especially once someone has proven themselves in the role. And often there's that initial stretch, the first few months where you got to be in the office more regularly, you're doing onboarding, there's a lot of relationship building, and you're just getting up to speed. But after that, flexibility tends to open up within the company's framework. How much that matters really comes down to personal preference and life setup. I speak to some candidates who really value a consistent office routine, and others put a very high premium on flexibility. And some just want a mix of both. So it's less about one being universally more important, and it's just more about whether the overall package fits how someone wants to work. But at the end of the day, when offers are being compared side by side and a meaningful difference in pay or scope of responsibility, that usually has more influence than an extra day at home. So yeah, flexibility, I think it helps shape the decision, but it's rarely the deciding factor on its own.
Now, a different question that we asked this year was around confidence and leadership. And specifically, we said, how much confidence do you have that your employer is prepared to navigate the challenges and opportunities ahead? So what did we find out, Rich?
Yeah, we found out that confidence in leadership is generally strong, but not across the board. So looking at the notes here, about 3/4 of respondents feel good about how their organization is being led in 2026, while roughly 1 in 5 feel less confident. So where things feel less certain is around career growth. So again, looking at the results, only about 1/3 of people say they have both a clear path forward and the support to reach the next level. Another 1/3 only have a general sense of where they're headed, and close to 30% say they're unclear about what comes next. So that gap, it's between feeling supported in your current role and understanding the future path. So this really stands out in a slower market where perhaps promotions are less frequent. I mean, we hear this from candidates. They want a clearer picture of how they can grow. They want to know what skills they need to build and how they fit into the longer term plan. So it isn't sort of a lack of trust in leadership. It's more about employees wanting clearer communication. They want visible development opportunities and better recognition, I think, as to how their careers can move forward to the next level.
Yeah, I would agree with that. So the final question that I'll put towards you both, what advice would you give to candidates right now? So Rich, maybe we'll start with you, if you can comment on up-and-coming talent.
Yeah, for sure. So I think people earlier in their careers, for me, versatility really matters right now. So do everything you can to learn beyond just your own lane. You have to take an interest in how different parts of the business connect. So whether that's development, leasing, finance, operations, you have to really understand how decisions in one area affect another. I mean, when the industry is growing quickly, it can really pay to be specialized, but in slower and more complex periods like the one we're in, having a broader understanding and more diverse of a skill set will really serve you well. And I think the people that stand out are the ones that can kind of step in and help out in different areas, see the bigger picture, not just focus on their silo.
Mm-hmm. And James, what about more senior folk?
Yeah, at the senior level, it's about leadership through a tougher cycle, right? You got everyone working hard, often harder than before, to get the same outcomes. And that can be really draining for teams. So leaders who stand out are going to be the ones who are open about the challenges, who bring their teams into the journey, and who make people feel part of the solution rather than just feeling the pressure, right? So when things do go well, a project lands, a deal closes, you hit a milestone, make sure you recognize and you reward the effort that got you there. And in a market like this, people don't just remember the results, they remember how they were led through the process.
Amazing. So that concludes our episode for today. And hopefully it's given you a really grounded look at compensation and hiring trends and really where career demand is heading as we move into 2026. If you would like a full breakdown of our 2026 real estate compensation guide, including the data, the insights and practical takeaways, you will find the guide can be downloaded from our website, highviewpartners.ca. Thank you so much for listening, and we'll see you next time.
Thank you for listening to People Who Perform, the Real Estate Careers podcast brought to you by HighView Partners, a talent search and recruitment firm focused exclusively on Canadian real estate. If your real estate team is looking to find the best next hire, or if you're ready to make the best next move in your career, then reach out to HighView Partners today. Follow us on LinkedIn and visit us at highviewpartners.ca.